Alright, what is up, guys? It is the 18th of March, 2025. We got NASDAQ over here on the right. We got S&P 500 on the left. This right here, what we're going to be looking at today is 1 minute charts. We're looking at 15-minute ranges. So, first trade day, we get divergence right here at 717. We hit this low with NQ. This one does not. We come up here. We start acting like we want to get above this little pool of resistance, liquidity, whatever the hell you want to call it. Fair value gap, inverse fair value gap, fucking super duper reaper, goddamn, whatever the hell those people want to call this stuff these days. Anyway. So you can see right here, we try to get above it, can't close above it. Then we come back down, you have another smaller divergence. It's only divergence on the 1 minute here, but you can see this one right here broke that low, came down here to that previous 15-minute low, took out that 1 minute low right here. This one did not. So that's an even better sign. You know, I'll tell you divergence is telling you something. It's telling you it wants to reverse on you. That's an even bigger sign. So you get that, and then you get this close above right here. Since we do have divergence, I'm going for this 3/4 retracement here. We get it. You know, you could have entered right here on the close of this candle because that's already a 155, which is, with my win rate, that's good enough. If your win rate isn't that high, then you need to get it down. And on this one, I mean, you can see if you tried to bring it down here, like midpoint of that, you got a 5-to-1 risk to reward. So you could have entered anywhere coming down on this candle into here, retracing into, this inefficiency or this one right here. And then we take off to the races. This one hit the 3/4 before this one did. So get out free and clear. Nice little reversal trade right there. Alrighty, second one we're looking at here again. This is a 1 minute chart. All these red lines that you see are going to be either highs or lows. Swing high, swing low, 15-minute time frame. These are price imbalances and efficiencies from the 15-minute time frame. So higher time frame, we execute on the 1 minute. So we got here. Again, this is 15-minute candle, previous 15-minute candle range. Projections upper lower. So we're coming down here. You can tell, and sort of my thinking here is, it's coming down here into this bullish inefficiency. So even if, you'll see on some of mine where I'll take a continuation if I can get good displacement here and a gap, which we don't have. Well, I guess we got a little bitty gap right there. But I would not take this because we're coming down into this shaded area, this inefficiency. So I wouldn't want to go short. I wouldn't bet on this going down. Plus, we just took this swing low, so I'm not interested in going short here. So anything I would do here would be going long. So we get that, get a reversal here, comes below, shoots back up. We have this smaller little 1 minute inefficiency here that it needs to get back over before I would be interested in going long. And again, I always trade NASDAQ, so that's over here on the right. I just use the S&P for, divergences. And so we see that here. We close above on this candle. That's this candle right here. This next candle trades down. Trades down enough to where I can get a little bit less than a 1.5, which is cool with me. So we enter the trade here. It goes higher and just right to the tick barely tags that 0.5. Since we didn't have any uh, divergence down here at the bottom, I'm not going to go for this 3/4 full. I'm taking full at half. So we got that there. And yeah, out of the trade. Now pay attention. This candle right here, you can see this one where he finally hit it. That's the 8/16 candle. So this is actually on the next 15-minute candle. And there's another trade that you can take here, and I will show you that in just a second, because this 15-minute candle right here created a 15-minute inefficiency right in here, and you'll see that here in just a minute on the next trade. So it's important to pay attention to time whenever you're looking at these, because whenever that candle, that 15-minute candle flips, you're going to have other trading opportunities you need to be looking for. So I'll show you that here in just a second. All right, so like what I was just talking about, this 8/16 candle right here that you're seeing. I see this shaded area up here. It's because that 15-minute candle, when this one closed, it created this between this candle's high, this candle's high right here. I'm sorry, not that candle, that was that line. This candle's high and this candle's high on the 15-minute time frame. So just to show you what I'm looking at here. 15-minute time frame, high, low. See this empty space right here? That's your price inefficiency. Okay. Bearish. This is bearish. So like whenever it comes up in here, you don't want to take a continuation up into here, because this is going to be trying to push it down. I'm not saying it can't go up and shit, it can blow right through there, but I don't take those trades. So anyway, we come up through here. This next candle comes down. So as you know, I will take it short right there if I can, but as you could see here, if I took it down here and, I could only I'm going for the 50%. If I took it way the hell down here, shit. If I took it down here, you're looking at a 0.69 risk to reward. Yeah, that's not good enough for me. Okay, I want at least a 1. I think I did, and I took this one. I think I ended up getting like a 1-2, because it after it went down and it tagged that, it came back up and pushed up a little bit. But even if you took it at the close, that's a 1-0. And I don't recommend most people taking 1-to-1 trades, because most people have like maybe a 50-60% win rate, if that. And obviously a 50% win rate and 1-to-1 win ratio, you ain't making any money, right? Okay, so you come up here, I enter, I'm targeting right down here. It almost tags it right there. Let me blow this up a little bit so you can see it a little better. Almost hits it, but look at this one over here. This one not only hits it with this 8/18 candle, it not only hits the 50% mark, but it goes down into this bullish inefficiency. So at that point right there, whenever I see it come down into here, I'm out. I closed the trade. I closed the trade right there. In profit, I didn't hit target, but, what did I end up with here? 0.88. Not terrible, not what I wanted, but not terrible. You could see here, if I would have held on to it and left my stop up here, it would have finally come down and given me it and some more. I don't care. 7 times out of 10, this is going to turn around and head back up there. It gets real shaky in here whenever you're in between two, and like a bearish inefficiency and a bullish inefficiency. So you really got to be quick on these, or you get your head ripped off pretty quick. But that was not a great trade, but made me money, so oh well. Alrighty, so after this huge run right here, if you don't got any part of that, good job. I did not. It took off. Anyway, this next, so this gigantic ass 15-minute, 200-point candle right here. So after that, I mean, I'm kind of thinking it's probably still going to keep on going a little bit lower. So we got some more inefficiencies to fill in down here. Some more lows down here to take on ES. So we get a close below right here, but we have not taken any liquidity, and there's not any displacement there, so I wouldn't short there. But then we move up, and you see on both of them, we come up into this little 1 minute inefficiency, and then we come lower and we close below right here. Okay, so you're gonna put your stop. You know, you can put your stop here, put it above that swing high, whatever you want to do. And then wait until you get up, and like I say, I always like 1.5. So that closes below. You come up here, you get in right there, stops up here, and first target is the top of this inefficiency, and you can get full out right there, or, let it run some more and come down here. Anyway, nice little scalp there. About 36 points. It's a decent little scalp. You get, they may look like a small move right here, but you got to realize this is 200 fucking points right here that it just ran. So that's still 36 points. So it's decent. Anyway, decent little trade there. All right, this is another one I took. So you can see right here, we're down in these the bullish imbalances down here, and then ES just took this low as well right at 9 a.m. So we start coming up, and you can see. So whenever we cross this point, that's when I start looking to buy. Obviously, you couldn't have bought up here because this would have been my target, and you can just eyeball that and see that would have been a dog shit risk to reward. But it did. It dove back down in here, and I mean, even right here, I could have gotten a 1.5. If you waited till it dropped in here, you could have gotten a 3, 4x. But took 1.5 there. If you wanted to pull back further, you could have. And then right to your target, easy. There's a few more trades this afternoon, but in all honesty, I think I'm just going to stop here because I got some other stuff I need to do this evening. But if you want, you can go back through, just look through your charts, mark them up the way I am, and you'll find. I shared them on my Twitter too. A couple of the trades I took later on this afternoon. If you want to go through and look at them yourself. Actually, I lied. I'm going to go ahead and just show you this next one here. Just to show you that this does not work all the time. There is no strategy out there. Like I said, I got a pretty high win rate, but there's no strategy out there that's 100% win rate, or we'd all risk our whole account on every single trade, and we'd all be zillionaires. That's not how it works. So you can see here, this would normally, I'd look at this as a possible continuation. So we got, bullish inefficiencies down here we're bouncing off. And I would be aiming for up here. That 50% projection, or the bottom side of this bearish inefficiency. So let's see how we'd set this up. This one comes first, so it's got to be right there. So that's about a 1.6 right there, right? So we get this up above. You could take it, since this candle right here took this little inefficiency, and then it closed above, but I don't really like these wicks